Hello everybody, what's going on? Few big insights are coming from news and take a look at this post that has been circulating on the Chinese social media. It shows NIO is scrambling for talent, literally interviewing candidates in the cafeteria to speed up the process. Now, on the surface, that sounds a bit chaotic, right? But for the keen-eyed finance viewers, this isn't chaos. It's a high-octane engine trying to break through its production ceiling. A company doesn't resort to this kind of immediate high volume hiring unless it knows one thing: demand. It outspacing supply and they need to scale up fast. This is a strong tangible signal that the market is hungry for NIO vehicles, specifically their new models and the ever popular ES8. But here's the really juicy part for us as finance folks: the compensation package they are offering. This gives us a direct line of sight into the company's confidence and financial health. Let's break down the employee salary details from the post. First, they are offering guaranteed minimum salary 6,200 RMB for a standard 5-day 8-hour work week. Second, total potential pay. With subsidies and overtime, it can exceed 8,000 RMB per month. Then, overtime pay 2x on weekend and 3x on holidays. This isn't just standard. It tells you they expect people to be working long hours, which again point to a massive push in manufacturing volume. Apart from that, they are also offering bonus structure, double salary plus a year-end bonus. Here, I would say that this is really a big financial headline. Company don't offer this kind of competitive, aggressive compensation unless they are confident in their margins and their future revenue stream. They are spending heavily to secure the best talent, which shows they are prioritizing quality and speed of execution over short term saving on the labor side. This is a massive capital incentive vote of confidence in their own future sales figures. What we are seeing here is a direct reflection of the EV adoption curve accelerating in China, which is the world's largest and most competitive EV market. NIO is not just competing with Tesla anymore. They are competing with a surging tide of domestic rivals by offering premium pay and benefits like 5 insurance and 1 housing fund. They are trying to create a manufacturing team that is stable, motivated, and dedicated to deliver a premium product. This high speed, high pay hiring move tells us critical things that are relevant to your investment thesis. First, the production bottleneck is real. If they are this dedicated for talent, the production isn't R&D or marketing. It's physically building the cart. Solving this is the single biggest factor in turning their potential into actual revenue. Second, cash flow confidence. The ability to offer a double salary bonus and a comprehensive benefit suggests they are sitting on a solid cash position or are extremely confident in their incoming capital, either from sales or upcoming financing. And third, focus on execution. The EV market is all about execution. The company that can deliver vehicles faster and with high quality wins. This hiring push is their aggressive move to seize market share right now. So, how do we translate this cafeteria interview into the stock market action? For the months, the narrative around NIO has been about the delivery numbers. The stock often moves significantly based on monthly reports. This frantic hiring to boost capacity is essentially front running better delivery numbers in the coming quarters. When you see a capital expenditure move this dramatic, you should anticipate a significant uptick in their production capacity within the next 6 to 12 months. As investors, we should be looking past the next earning report and focus on company's ability to achieve sustained run rate of, let's say, 30,000 vehicles a month. This talent scramble is the investment that they are making to hit that goal. So the stock market loves a growth story, but it loves execution more. The bigger risk for any high growth EV company are usually capital constraint and manufacturing difficulties. This news directly addresses the manufacturing side with a clear, financially strong commitment. This is not a story about a company failing to find workers. It's a story about a company bursting at seam with demands and putting its mouth where its money is to scale up. They are investing heavily in the human capital required to unlock their next phase of growth. This is a very positive, tangible sign of genuine operational confidence. It signals that management believes the path to being a global EV leader runs directly through a massive rapid production scale up, and they are sparing no expenses to get there. So as investor, we should also be ready for this. With that said, thank you so much for being here. See you in next one. Hello everybody, what's going on? Few important updates are coming from news, and the news broke from Go Electric Day event. NIO is officially launching its core brand and its sub-brand Firefly in Luxembourg in February 2026. Now on the surface, this is just another market entry, but dig deeper and you will realize that this is a calculated financial pivot that addresses a core problem for NIO's ambitious global goals. This isn't just about selling cars, it's about a smart business model. So the question here is that why Luxembourg? It might be small, but it's an EV powerhouse. The nation is a blueprint for successful EV adoption. We are talking about a market where battery electric vehicle already count for over 20% of new car registrations, nearly matching traditional combustion engine. They have one public charging point for every kilometer of the road. For NIO, launching here is a high visibility validation point for the entire Western European market. But the real financial headline is the launch of Firefly. Up until now, NIO has been a premium player, with models like the ET5 and EL6 priced well above 60,000 euro. Firefly has changed the game. Its first model is expected to start around 29,990 euros. This price tag is key to massive volume. It positions NIO to compete directly in affordable urban EV segment, opening a potential customer base that was completely unreachable by their existing models. It's a dual-pronged strategy: premium NIO for margins and affordable Firefly for the volume and market share. Now let's look at the financial engineering behind this expansion. In the past, NIO favored a direct sales model in Europe, building its own NIO houses and service centers. While that creates a great brand experience, it is incredibly capital intensive and slow down to scale across a continent with diverse regulation and logistics. But in Luxembourg and neighboring Belgium, NIO has announced a major strategic shift: a partnership with the European dealership giant Heading Automotive. This is huge. They are moving to a hybrid distribution model that leverages the existing infrastructure and market expertise of a local dealer group. This move achieves three critical financial objectives. First, it lowers the operating cost. Handling over the sales logistics and local overhead to a partner drastically reduce NIO's upfront capital expenditure and long-term operating cost in these new markets. Second, faster scalability. Head-in can roll out sales and service point for quicker than NIO could build them from scratch. Speed to market is everything in the EV race. Third, local expertise. Head-in knows the local customs, regulations, and customer preference. This reduces the risk of expensive misstep. This shift proves that NIO management team is pragmatic and financially disciplined, learning from earlier European experiments to create a more cost-effective, durable expansion strategy. It's a strong sign of management maturity. Luxembourg is just the tip of the iceberg. This launch is the first confirmation of their aggressive multi-front global war. Between 2025 to 2026, NIO has confirmed plans to launch in 7 additional European markets, including Austria, Poland, and Romania, plus new venture into Asia and the Americas, specifically Singapore, Uzbekistan, and Costa Rica. What we are witnessing is the coordinated high volume deployment of this new hybrid sales model, driven by the volume potential of the Firefly brand. They are not just entering the European market, they are stimulating, attacking emerging market with high growth potential. This strategic high volume lower cost Firefly on an efficient partner driven hybrid sales model is the global growth multiplier the company has needed to justify its valuation and accelerate its path to sustain profitability. So the key takeaway here for the investors is that the market has been waiting for NIO to prove that its visionary technology and premium brand can translate into profitable, scalable global business. The plan to launch Firefly in Luxembourg in February 2026 coupled with the strategic pivot to the hybrid distribution model, provides the strongest evidence that they have found the formula. This is the transition for a capital hungry growth phase to a capital efficient scaling phase. With Firefly providing volume and the dealer model cutting overhead, NIO is positioning itself for a powerful two-prong attack on the global EV market. The company is no longer solely relying on the high-end customers. They are becoming a genuine competitor across the EV spectrum. This disciplined strategic expansion dramatically de-risked their international growth and brightened the path to long-term profitability. For new investors, this isn't just a good news. It's the clear signal of a company ready to execute on its global ambitions. And I believe the future looks very bright from here. So get ready for it. With that said, thank you so much for being here. See you in next one. Hello everybody, what's going on? Few big insights are coming from NIO and company just delivered some genuinely exciting news. According to a post on Weibo by Sun So Jun, a well-known industry commenter, NIO latest weekly sales have officially crossed the 10,000 mark. To be precise, they hit 10.6k last week. Now let's break down those numbers because they tell a powerful story about NIO diverse brand strategy. The main brand NIO exceeded 4,000 units, but the real powerhouse pushing them over the top were their sub-brand. Ledao delivered 5,000 units, and entry-level brand Firefly exceeded 1,500 units. This isn't just about the total volume, it's about ecosystem growth. Ledao is clearly hitting a sweet spot in the mass market, and Firefly is bringing new customers into the NIO family. The success is being driven by strong performance from their top models. Sun Sao Jun specifically highlighted the L90, noting its single week deliveries exceeded 3,500 units. That's a massive number, and it reflects a huge jump in their production capacity, up by 50% compared to the last month. And the flagship SUV, the ES8, is officially in a stage of increasing volume. This suggests that NIO has officially ironed out production bottleneck and is now ready to scale. The fact that Firefly model was also reported to be short in supply tells us that demand is strong across the border, which is a great problem to have. So here's the key takeaway for the investors. Sales are great, but the ultimate goal is profitability. It is reported that CEO William Lee recently reiterated a critical internal goal to middle and senior management, achieving profitability in the fourth quarter of this year. He emphasized that is the key task the company must achieve. This is huge. The market has been waiting for NIO to make a leap from a high growth startup to a sustainable, profitable enterprise. Hitting this 10,000 plus weekly sales milestone is not just a vanity metrics. It's the volume required to achieve the necessary scale and operational leverage to finally turn that corner. So what does all this mean? It means NIO's strategy bet on multiple brand approach from premium flagship to mass market player is starting to pay off with tangible results. This surge in sales, coupled with an aggressive focus on operational efficiency and a public commitment from the CEO fourth quarter profitability, paints an increasingly positive picture for the company's financial trajectory. For the long time, the narrative around NIO has been about potential. With this 10k sales milestone, we are starting to see that potential turning into a powerful reality. If they can maintain this momentum and execute on that profitability goal, it could mark a true inflection point for the stock and for the company's future. So get ready for it. With that said, thank you so much for being here. See you in next one.